We live in strange monetary times. Trillions of new debt every year, unaudited gold reserves, and Bitcoin, gold, and even silver are constantly printing new fresh highs. Trust is migrating to whatever is transparent, border agnostic, and provably scarce. That's where Kinesis Money comes in and is putting fully backed gold and silver on blockchain and even paying holders a share of platform revenue, along with a handful of yield programs. Today I'm joined by Hough, the global partner manager over at Kinesis, to explore three big questions. Can digital ledgers and independent audits solve gold and silver age-old transparency problems? Is yield-bearing metal the next evolution of sound money? And how do precious metals and crypto fit together as governments and institutions rush into digital assets? Stick around as we unpack the future of real money in a digital world. Chris, how you doing?
Doing great, man. I'm excited for our chat today. I know your audience is a little bit more crypto savvy, and Kinesis is founded on gold and silver, but it's tokenized, so it's an interesting mix of crypto and gold and silver. And I think your audience is really gonna like the different products we have to offer.
Yeah, absolutely, guys. I feel like we have a little bit of a split audience here on DataDash, where a lot of you are more towards the precious metal bug route, and then you have, of course, your Bitcoin fans. I think this is going to be a great video for anyone across all avenues, really. If you're heavily involved in the crypto space and you love that volatility, well, exploring avenues to de-risk yourself to a degree, but also still be able to capitalize on that. A lot of the unique technologies that blockchain has to offer, like yield programs, stuff like that. I think this is going to be a really slam-packed video for you. We're going to touch on some geofinance topics, some debt crisis topics. We're going to touch on how gold and Bitcoin are really taking over right now, taking the spotlight in the financial world. And then, of course, we're going to dive into a lot of the details behind Kinesis and how you can really take advantage of what they have to offer. So, Chris, I just wanted to give a brief overview to the viewers on Kinesis first, and then we're going to jump into some a little more broader topics and then get back into Kinesis specifically. So, for those that don't know, Kinesis, launched in 2018, marries the historical stability of fully allocated gold and silver with the speed and programmability of blockchain. You guys are aiming to turn precious metal ownership into a spendable, yield-bearing digital asset class. In short, Kinesis positions itself as a sound money alternative to debt-backed fiat and high volatility cryptos. Would you agree with that?
Yeah, I'd agree with that. I want to point out, it's funny because you and I can also get into a discussion around silver specifically. In one of your previous videos, you kind of knocked silver, and I'm a silver bug, so I'm excited
Yeah.
to maybe change your mind on that one a little bit, but we can get into that later. Yeah, and I would go even further. I would say that Kinesis has already made gold and silver spendable in a digital form, right? Our ecosystem is up and running. There are more features coming, like the debit card that we can touch on, that will make it even easier to spend in the real world. But even that aside, right? Kinesis, we call our system the KMS, or the Kinesis monetary system. It's already up and running. You can already buy digital, physically allocated gold and silver, right? And you can spend it with someone who will take it. You can hold it. You can earn all kinds of yields on it. So the system's set up, it's working. It is a monetary system. It is an alternative to the current debt-based system we find ourselves trapped in. And if you want to start there, that sounds like a great place to start.
Yeah, absolutely. Well, for starters, Bitcoin and gold, like I mentioned, are really taking the limelight right now. I feel, a lot of people, even around my age range in our early 20s, we're looking at obviously Bitcoin, but gold as well, as like, dang, gold's been killing it. And, with all the instability in the world, it could really be an option for us to consider.
Yeah, for sure. And I want to point out too, just the past 5 days. Now, listen, this is not an exact science on my part. I don't have the exact number, but silver is up approximately 18% in 5 days. So,
Oh, wow.
yes, gold, but like pay it. Listen, I'm a silver bug, so I do have a bias, but that's legitimate. So pay
That
attention to
is.
silver. I was looking at something where a month ago the silver price was, so this is 30 days ago, the silver price was just over $32, and now we're crossing like 37.50
Oh
in
man.
30 days. So silver's off to the races. In my opinion, it's not going to stop. We can get into, again, silver separately, but silver's not going to stop. It has a ways to catch up with gold, and gold's moving too. So we can get into how they historically move together if you like, but silver's got some ground to cover. So,
Yeah,
you know,
well,
again, I don't want to harp on that too much, but silver
no, no,
excites me. That's just
absolutely.
where I'm at, and
No,
I
that's
really
a
want to have this discussion because you kind of knocked on silver, and it's all good, but I want to kind of just point out. I mean, you literally said in one of your past things you're not sure why anybody would hold silver as kind of a joke, and I have about 10,000 reasons. Again, we can get into that later, but yeah, it's exciting. Gold, silver, Bitcoin. You know, I think everybody will say the altcoins will start moving here soon. I think crypto season is possibly upon us.
Mhm.
As far as the altcoins as well, altcoin season, I guess is what people call it. So yeah, exciting times for the alternative investments, which is great because traditional investments, you know, they want to call Bitcoin and these things a Ponzi scheme, but the reality is it's their system that's the Ponzi scheme. The debt-based system is the Ponzi scheme. It's fractional reserve everything at this point. So if you're buying something and it's a representation of something else, if it's paper stocks or paper derivatives or ETFs or any of these things, you need to do your homework and you need to know that the party you're buying the paper from has whatever the asset is to back that paper. At Kinesis, we do. So that's really what separates us, right? We have these digital tokens in KAU and KAG. Those are our gold and our silver tokens, and they're backed by physical one-to-one. Now, how we prove that is twice a year independent audits by a world-leading audit firm, and their reputation's on the line. We pay them to do an independent audit, and it's really cool because this gets into that whole blockchain aspect you were talking about, where they come in twice a year. We freeze all our vaults. We have 13 to 15 vaults, something like that, across the world. And we freeze all our vaults, no gold or silver in or out. And then what happens is we take a snapshot of the blockchain, and they send teams in simultaneously, and they hand count all the gold and silver, and they produce this report, which you can find on our website, that matches the physical to the digital. So again, this is that blockchain aspect that comes in. The blockchain cannot be altered. It's immutable, right? So on the blockchain, we have every fraction of an ounce of gold and silver, and KAU, by the way, our gold token you buy by the gram, and KAG, the silver token you buy by the ounce, but both are divisible by 10,000 decimal points. So basically, you can buy 1/10,000th of a gram of gold or 1/10,000th of an ounce of silver. But that's how detailed this is. They go in the vault, they calculate it all up, and you get these really cool reports that marry the physical world, the physical gold and silver, to the digital tokens. Now, also, I want to point out that the digital tokens give you legal title to the physical. It's your physical. It's in your name. It doesn't sit on Kinesis's books as an asset. It's your asset, and the digital token is the legal representation of that physical. Why that's important is because in the gold and silver world, there's something called a Bailey agreement, right? And so what happens is if something catastrophic were to happen to Kinesis, okay, a Bailey spins up and they contact all the Kinesis customers and ask them where they want their physical sent. It's not Kinesis's gold or silver. It's the people that own the digital. So it's just another layer of protection. And again, KAU and KAG is fully redeemable as well. So there are some minimums, but assuming you have the minimum amount of gold or silver tokens, the KAU and KAG, you can send those tokens to us and we will send you the physical. A Brinks truck literally shows up at your house and delivers your physical to you if you redeem it. So we're going back to constitutional money, right? This is written in the Constitution. All these shenanigans with paper dollars that are unbacked by gold and silver, it's just that. I mean, you can make a very strong argument it's unconstitutional. The Constitutional literally says states can emit nothing other than gold-backed certificates or gold and silver legal tender. So how we did this sham, which we can get into if you like, where in 1932 we detached gold from the dollar, and then in 74 Nixon completely took the peg away completely so that we could print money into oblivion. That was the scam. If dollars are backed with gold, you need to have more gold to print dollars. The dollars are supposed to represent the physical, much like KAU represents the physical one-to-one. The dollars are supposed to do the same thing. That's what currency is. Currency is something that represents gold and silver, which are real money. Currency is not a piece of paper that has nothing behind it but the faith and confidence of the U.S. government, the debt issued. That's not currency. That's just toilet paper. I mean, that's just the reality of the situation. So it's very interesting that if you go back and you study history and you look at why these things were done, you can't just print money if it's backed by gold. You actually have to have the gold, find the gold, source the gold, have it in your possession to issue the extra dollars. So how do you buy more things as a country? How do you go out there and build more infrastructure and do more spending and do all these things as a country? You would have to have the gold. Well, if you don't have the gold, you're kind of stuck. So what do? Oh, well, if we unpeg gold from the dollar, we can just print dollars and play pretend and pass out those dollars and buy whatever we want, until people figure it out, basically. And that's where we are. It's a debt-based system, right? And I'm a God-fearing man, but we can certainly go back to the borrower is slave to the lender. What is a debt-based system? We're all slaves. We're all in debt. These dollars mean nothing. We're working, we're trading our energy, our time, our resources, our goods for phantom printed dollars. Meanwhile, the central banks hold gold. I mean, your audience and we all need to recognize, wait a second, why don't the central banks hold dollars? Because they're worthless. That's why the central banks don't hold dollars. They hold gold. That is money. Historically speaking, it's money. It's always been money. I sympathize and I understand crypto. Trust me, I was at Dash as the head of growth for about 6 months, and then at Salt Lending for a while before I landed here at Kinesis. And before that, I was personally involved in crypto for a long time. So I love crypto, and I understand that Bitcoin can be viewed as money, and maybe it even is money. But here's the difference: what's the history, right? Bitcoin has a history since 2008, so we're going on 20 years. Gold has a multi-thousand-year history of being money. So that's the difference. And I'm not saying that Bitcoin doesn't have its place and is or isn't money. I'm just arguing for the historical aspect is very important to think about when deciding what's money. Bitcoin is relatively new. I mean, it's not even relatively new. Bitcoin is brand new. 20 years is nothing in the span of human history, right? And that's not to say it is or isn't good or whatever. And I'm not knocking Bitcoin. I'm just saying there is a historical precedent there that gold has that Bitcoin doesn't. What's the problem with gold? Nobody wants to carry it around. It's heavy. You can't shave it off. It is fungible in the fact you can buy smaller denominations, but you can't easily shave off a little bit of gold to do this or do that until you make it digital and you make it divisible, just like Bitcoin. So it's very interesting. Bitcoin is digital gold. What is digital gold? Digital gold is also digital gold, maybe more so than Bitcoin. And again, I'm not trying to upset the crypto crowd. I get it. There's big gains to be made in Bitcoin, but there is big gains to be made in gold too. So it's just something your audience needs to think about. In whether it's Bitcoin or gold, this is what I'm telling you. Hold either. Watch the dollar. I don't know. The Dixie is the dollar index. It's in free fall. By everyone's metric, it's in free fall. What does that mean? That means your dollars buy you less stuff. hyperinflation is probably coming. I don't see how it's avoidable, right? Nobody sees the future, but you just look at indicators and it's in free fall. This is not good. The situation is very, very bad for the dollar right now. And so you want to be in alternative investments. And it's great. We have Bitcoin, we have crypto, now we have digital gold and silver, and certainly we have physical, which I'm a fan of too. If any of your audience is, full disclosure, right? I have my stack of physical silver, I have a little bit of gold, and then I have my digital. It's a great way to diversify within that asset class. So
Yeah,
sorry
absolutely.
for my rant, but yeah,
No,
that gets us kind of caught up.
I can tell you're very passionate about this topic, and
Oh yeah, love it.
sounds like you're in the perfect role at
Yeah,
Kinesis for all
I
this.
appreciate that.
Um, I totally understand where you're coming from in regards to Bitcoin and gold having its differences, some similarities, but probably more differences. But one thing that's very similar is, this past month, we'll throw silver in there as well. Bitcoin, silver, and gold are all brushing all-time highs this past month. Do you see that? Do you see with this rare similarity of simultaneous strength? Do you think that signals to investors that they now see these three assets as complementary sound money? And do you see this playing? Do you see these different assets playing different or similar roles together? And what distinct role do you see each fitting? So with
Yeah,
Bitcoin,
very
of
good.
course, some people can view it as a form of currency, a form of payment. Over in El Salvador, they're doing that.
Yeah.
With gold, usually more of a store of value. What do you see the differences between the two, between the three?
So that's a great question. It's funny because I think that Bitcoin, gold, and silver, I think they can all compete, but I actually think they can all win. So I think when you get down to it, they are competitive in nature, right? They're all competing to be kind of money. So I don't know that they're complementary. I think that they are competitive, but I think there's room for them all to win because I think everything else loses. Everything else loses. I think those three are going to win, at least short term, and then I don't know. All bets are off from there. But let's make sure that we clarify a couple very interesting points. The one thing is, I will concede the fact that that Bitcoin started the blockchain revolution, the digital payments revolution, the decentralized revolution, right? Bitcoin started that. Bitcoin is the first mover. So Bitcoin's always going to have that to its name, and Bitcoin has the younger generation as a following. Okay, I think we can agree on that. However, Bitcoin does not have the older generation as a following. Gold and silver do, right? Somebody that's been around a long time is used to gold and silver being money, and they're not so familiar or comfortable with Bitcoin yet. So you have these two demographics buying each as money. So that's the first thing. Now, silver is very interesting. Bitcoin is this digital gold. Gold is this physical asset. Again, at Kinesis, we've turned it into a digital asset that now is much more fungible and spendable and can exist in the digital space for digital payments. So that's fine. What's interesting is silver is very different because silver has an industrial component. So this is one of the things when you had kind of mentioned, oh, who would hold silver? The industrial component with silver is the game changer. Let me give you some crazy stats, right? I think it's the nuclear warhead takes 400 ounces of silver to create. I believe that's correct. Again, this is my own research, and obviously lots of stuff out there could be wrong, but that's kind of where I landed. 400 ounces per nuclear warhead. What does that mean? The price of silver goes up. The military-industrial complex is in a lot of trouble. That's just the nuclear warhead. That's not regular bombs. That's not tanks. That's not any of this stuff. Every single thing electronic that you touch uses silver. Why? Silver is the best conductor of electricity on the planet. Nothing can conduct electricity better. And it's not so much the conductivity. What it actually is silver doesn't heat up. And that's the problem. If you use another metal for wiring, it gets hot. And when it gets hot and it's touching these circuit boards or these other intricate electrical pieces, it begins to melt things. It begins to fry things. It begins to have a lot of problems. So you have to use silver. So just think about what that means. All your coax cable, all your internet, all your computers, all your TVs, all your, again, military industrial complex type stuff, all your satellites, all of your solar panels, all of these things need silver, and an enormous amount of it. Forget electric cars without silver. Just forget it. I've tried to do some research and figure out how many ounces is in a Tesla, and I can't quite get there, but it is a considerable amount of ounces per Tesla. So what does this mean? What this means is when you mine for gold and silver, okay, the ratio is about 9-1. So every ounce of gold, you find about 9 ounces of silver. There are silver mines, so this is not all encompassing, but in reality, nobody really mines for silver. What you do is you mine for other rare earth metals, and then as a byproduct, you find silver. So you're mining for gold, you find an ounce of gold, and you find 9 ounces of silver. That's what it comes out of the ground at. So let's just do a little, let's just play with a couple of facts here. This is really crazy. You find it in the ground 9-1. The price discrepancy between gold and silver, now again, silver's been on a tear, but as of a week or two ago, it was over 100-1. Why, if you find something 9-1, is the price over 100-1? It's manipulation. That's it. That's the only conceivable reason why there's that kind of price discrepancy. So what does that mean? There's an investment opportunity here because the price should be 9-1. Now I'm going to make a really crazy argument for you, and I'm going to point out that because of this usage of silver, and this is usage you can't get back because the pieces of silver in your computers or in your TV or in all these things are very, very small in the form of wires and all these things. So it's not impossible. It's very time consuming and costly to reclaim that in any feasible amount. So silver gets used up, gold does not. What does that mean? The above ground available supply of gold to silver is closer to 1-1. So why is the price over 100-1 when it comes out of the ground 9-1, and then the above ground supply available for use is 1-1? It's manipulation, pure and simple. And what that means is when the manipulation breaks, the only possible explanation is silver is going to go screaming higher. And I think that's what we're starting to see. I mean, there are crazy things happening. This kind of idea of this green revolution. Look at how much silver is used in windmills. Look at how much silver is used in solar panels. California recently passed a law a couple years ago now where every new home build needs solar panels. If California continues to grow at the same pace, California alone uses up all the world's supply of silver in 8 years. Who's doing this math? Who's coming up with this stuff and not realizing what this means? What this means is the price of silver is going to go screaming higher. Now, again, I'm not arguing against gold or against Bitcoin. I'm just saying they don't have an industrial component, and that industrial component is gobbling up silver at a pace. We've ran a deficit with silver now for several years, 5-6 years in a row, where we're using more silver than we're mining on top of all that.
Do you see the manipulation aspect being more so to keep the cost of goods and goods down?
Correct. Especially when I kind of started doing this research into the military and how much silver they use for all of their weapons and all of their tech. The military industrial complex cannot exist at a higher silver price. It just can't. And so that is a big reason for the manipulation, is just that aspect alone. But the other aspect is we as a society cannot continue to advance in a technological fashion, right? Yeah. Unless the price of silver stays low, because we can't continue to build all this digital infrastructure, right? It becomes too expensive. The powers that be, right, whether it's good or bad, we can make that argument separately, but they're pushing us into this green agenda. They're pushing us into AI. They're pushing us into all these things. What do they all have in common? They all have to have silver. This agenda is dead at a much higher silver price. You can't afford to do it. And here's the terrifying aspect of the whole thing, right? As a society, we're so heavily embedded with technology, we have a real problem moving forward in our current societal fashion at a higher silver price. So there's a lot of dangers with silver moving higher. Things have to change. We can't continue to create all the tech at the speed we do, and things, people have to pick and choose what we're going to move forward with. There's just not enough silver to do it.
Yeah, I mean, it sounds pretty straightforward to make that change happen, but money talks, so I'm sure it won't be
Exactly.
the easiest thing to convince all these people utilizing the silver to
Yeah,
change
exactly.
course. But I
Let
do
me
want to,
point out two. I want to point
yeah,
out two interesting
go
things
ahead.
real quick. Both for the Bitcoin fans and for the gold and silver fans. Okay. Um, the way I see this kind of ending. Okay, you had mentioned El Salvador taking Bitcoin as a national currency, right? Let's just go down this little experiment where, and let's not say it's El Salvador. Let's say whatever country we want. Some country starts really getting heavy into Bitcoin, right? And the United States deals with that country. And the United States goes to them like we do every year, and we go to negotiate. Say it's beans or any goods you can think of, but let's just say it's beans. And this country is the only country that has this particular item, these particular beans. And we go to them and say, hey, we're ready to order our $20 billion of beans for the year, whatever. And the price negotiations start and everything gets squared away. And then we say, okay, cool. And then we start writing the check as the United States. What happens when that country says, whoa, 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 wait a minute. We know you just print the money out of thin air and then you buy our goods with it. So we don't want your dollars. If you want the beans this year, we want Bitcoin. The United States has a lot of problems when that happens because they either have to go into the Bitcoin market and gobble up a massive amount of Bitcoin in order to buy this product, or go without if it's only, or find an alternative. But if it's only one country that has it, so you have a big problem. So that's one way this ends, right? That's one way this fails in a catastrophic manner, when countries have to concede to the fact that Bitcoin is better than debt-based notes that nobody trusts each other with, right? So that's one. Number two is, from the gold and silver standpoint, the COMEX is out of New York. Your audience kind of looked this up. It's actually the only physical platform, trading platform for gold and silver on planet Earth that sets the price. So right there, okay, if one entity setting the price, this just stinks
Wow,
to high
I
heaven.
didn't know about that at all.
Yeah, crazy.
That is
So
crazy.
you and I, and I assume most of your audience, maybe there's one or two of you out there that are insanely wealthy, but you and I and your audience, generally speaking, don't get to play in the COMEX. Why? Because each contract, right? I believe it's one gold contract is 500 ounces of gold, and one silver contract is 5,000 ounces of silver. So that's one contract. So you have to have big money just to buy one contract. Okay. Now, the COMEX admits it leverages gold and silver. There was a point in time where it was fairly obvious they were leveraging silver 70-1. What does this mean? This means that every time somebody buys an ounce of silver from the COMEX, 70 other people have claim to it. That's insanity, right? That's fractional reserve everything, which is what I get back to. They don't have all the gold and silver they claim to. I would argue they don't have much at all, and that's been the big reason for all the gold and silver coming back in the United States. But the point is, another way this could feasibly end is a big player. Warren Buffett is a good one that comes to mind because he's a big gold and silver guy, and there's a couple other billionaires that understand gold and silver. They buy these contracts at the COMEX. And then one day they get spooked and they go to redeem it because the COMEX is supposed to be redeemable. And they send them their contracts. And the COMEX says, oh, yeah, we can't send you your gold or silver because we actually don't have it. The moment that happens, this is over because the panic's on. I don't know what the numbers are, right? But let's claim that, there's, I don't know, a couple billion ounces of gold above ground. And let's claim the COMEX says it has, a couple 100,000, or a billion ounces of gold or whatever it is. And then the COMEX says, oh yeah, we don't really have it. All of a sudden, that's a huge percentage of the above ground gold that just disappears and doesn't exist. Same thing with silver. What happens if the COMEX folds and I don't know what it is, some chunk, 20%, of the world's silver, 30%, I don't know what it is, disappears overnight. Well, let me tell you something. Elon Musk, Apple Computers, all these guys, they go into full panic because, wait a minute, there's not, 11 billion ounces of silver above ground. There's only 6. The rest was just fake. We just pretended it existed and it didn't. Let me tell you, the panic is going to be on. And when the big dogs start panicking into gold and silver because they realize it's fractional reserve, just like the banking system, just like everything else, the price is going to go on a tear. So those are 2 ways this ends in my mind. One with Bitcoin and a country refusing dollars or refusing any fiat and saying, hey, you as a country need to pay us in Bitcoin now. We don't trust you, right? I think that moment's coming. The other is a default at the COMEX, which is feasible, and that moment may be coming too as people get spooked and try to protect their wealth in these alternative assets that you, me, and your audience all are very aware we need some chunk of our portfolio in.
Yeah, and that's a perfect segue into our next topic. I think people are becoming very accustomed to transparency in the digital asset space, especially after the FTX collapse. That really sparked a proof of reserve era for all exchanges, and just blockchain in general with public ledgers has really changed the game in regards to how we really think about everything. Even from voting systems and records, et cetera, et cetera. With Fort Knox, we've done 2 videos on the channel on Fort Knox. They haven't had a full audit, a full bar-by-bar audit since 1953. This has led many to wonder if the 140 million ounces is actually there.
Yep.
If an open audit was released tomorrow, and they showed a shortfall in the U.S. reserves, how do you think markets would react?
Well, I will make the argument. I don't think the gold is there, probably at all. There has been a huge movement of gold from the London Bank over in London, one of the biggest gold holders, into the U.S. after this whole Fort Knox thing happened. So are we scrambling to repatriate some of the gold? I don't know. All I know is, hey, is the gold there? And then all of a sudden, big movements of gold start coming back to the United States. So it just, the timing suggests something crazy is going on. But again, the invisible hand of economics, right, always wins. Supply and demand always wins. You can manipulate things for a time, for a season, for a while. All these gimmicks work, and they come up with new gimmicks to keep this going. But if the gold doesn't exist, oh my goodness, I don't even think you and I can quantify the consequences of something like that. This just means the United States has paper. That's it. We have paper. We have nothing else. The number one asset you want to have is gold to shore up your books, to shore up that you have strength, to shore up that you can pay debt in other ways should something happen to your currency. If we don't have gold, oh my goodness. Let me give you an example. Now, I did this again. I want to preface all this with a couple things. Number one, this is all my own research. These are all my own conclusions. Certainly they can be wrong. Number two, as you know, none of this is financial advice. I am simply pointing out things I've discovered, and I am imploring, I'm begging you and your audience to kind of follow up what I'm saying, do your own research. And if it jives with my research, that's a good indication a lot of this stuff is over the target, and we all need to rethink how we're preparing for the future. That's what this boils down to. But my math, this is back in 2017. This is before a lot of the money printing during COVID and all these things. Back in 2017, did a simple exercise. Throughout history, every country, all the time, it's happened over and over and over again, hundreds if not thousands of times. The same thing happens. They begin to play with their money, and the citizenry eventually figures it out, and faith and confidence is lost in the currency, right? The thing that represents the gold and silver, okay? Whether it's clipping coins, printing dollars, whatever it is. So what do they have to do? This has happened hundreds of times. They have to say, okay, we're sorry. Here's what we're going to do. We're going to reback the currency with gold. And here's the ratio. It's all good. Here's the gold. And they kind of do a reset and start all over, right? So as an exercise in 2017, I say, okay, let's take the government at its word. Let's say we have the gold we say we do. And let's say that the amount of money printing is what they say it is, okay? I think we can all agree those numbers probably aren't face value, but let's take them for face value. If you take the amount of gold that the United States says it has, and if you take them at their word for the amount of money we printed, if the United States, if the dollar got into trouble and they had to do what historically has always happened and said, okay, we get it. Nobody believes in this fake money anymore. We're going to reback it by the gold. Here's all the gold. Here's the new price. If you wanted to back the dollar by gold back in 2017, gold had to be north of $120,000 an ounce. Now, again, you can back it by varying amounts, but you can easily get there. So this is what I'm saying. A gold price that's moved from very quickly from 3,000 to 3,500, we're all cheering. That's an amazing move. That's nothing compared to the amount of paper that's been printed. Nothing. Doesn't even come close to begin to rectify the situation. And so, to your point, if the gold is not there, or if there's a shortfall, expect, I don't know. I don't know. 10x at a zero? I don't know what the price movement's going to be, because no one truly knows the amount of dollars and the amount of money that's been printed. They're not telling us the accurate numbers, but gold reflects the weakness of a currency. A rising gold price reflects a currency that's failing. So, if the currency fails, what's the gold price? Astronomical. It's just, again, there's historical precedent to back all these things up. You need to study history. You need to just do some simple math. Again, don't use my brain, right? Use your own brain, make your own decisions. But it's not that difficult when you start, picking up rocks and looking underneath them. How does this really work? And that's what you should be asking yourself. You have dollars in your, in your wallet or in your purse, and you go out and spend them. Nobody sits and thinks, how does this all really work? I'm telling you how it works. They print the dollars out of thin air and hand them to you for your hard-earned work. That's how it works.
Yeah. And one thing I constantly really iterate here on DataDash is that, especially with these higher ups, we really have to watch what they do, not what they say. We just did a video on Jamie Dimon and his constant rhetoric towards the industry over the last 10 years and how it shifted drastically to them, launching their own cryptocurrency, their own on-ramps, et cetera, et cetera. Outside of that, we're seeing major geopolitical and institutional shifts in general into hard assets. 95% of the U.S. central banks plan their fourth year in a row of record gold buying. We just saw Florida. Ron DeSantis just made gold and silver legal tender, set to begin in 2026. But even outside of the U.S., BRICS governments are discussing gold-linked settlements. Do you think this macro environment is translating into the average retail investors taking gold and silver more serious as a hedge against instability, or do you think the majority of retail investors are still kind of in the dark?
Oh man, yeah, retail investors are so in the dark, because even right, it was actually Adolf Hitler that was credited with saying, if you scream something long enough and loud enough, everyone will believe it. Well, what we've been screamed at our entire lives, all of us, is the dollar is king, the dollar is money, don't look anywhere else, dollars is what you want to hold. So even though we see these other things, the general public, it's not enough to make them take action. What is enough to make people take action, right? There's two great motivators, fear and greed. So I think that what you're seeing now is not general understanding of the populace as to gold and silver or Bitcoin. Again, we need to kind of throw them all in the same bucket here. What you're seeing is they're not understanding the dollar is this Ponzi scheme and this is real money. What they're understanding is, I'm really getting worried about all these things, these geopolitical risks. There's some fear here. And when there's fear, what do? You try to find assets that are the safety play, right? And I don't know that Bitcoin has proven that yet. I think it can. I think that it's there. Gold and silver certainly have throughout histories, right? That's one reason you move. But what's the even more motivator? Greed. As a higher gold and silver price, right, begets a higher gold and silver price, right? The tulip bubble, all of these things, Bitcoin moving. When Bitcoin goes, more people pile in. When it goes, more people pile in, because there's a greed component here. So I don't think the understanding is there yet. I think the motivators are just fear and greed. And I really want to make sure we segue too into the fact that now with Kinesis, right? So you can come to Kinesis, you can create a Kinesis account. We have, in my opinion, with my understanding of monetary history, right? I don't want to overshoot this, but the most important things in the history of money are happening now, right? And Kinesis is leading the way. And so there's twofold here. Number one is gold being divisible into such small fractions, of a gram and being spendable digitally. That's huge. Nothing like that has ever happened in the history of money. It makes gold easily used as money. That's number one. Maybe the most important thing, and one of the, again, I don't want to overshoot this, but in my mind, one of the most important things to ever happen in the history of money is Kinesis has built a system where holding gold now produces a yield. Okay? Why is that important? The argument against gold for traditional investors is, quote unquote, it doesn't do anything. What they're talking about is when they go into the stock market, they can own a stock that has dividends, right? So the stock price goes up, they earn there, but then even if it kind of remains stagnant, they're getting a passive income from the stock. Gold can't do that until now. So the way our yield system works, I don't want to overcomplicate this for your audience, but whenever you send or receive, not receive, but whenever you send gold and silver or trade gold and silver, right? With our platform, you can come in with Bitcoin, swap some of it into gold, swap some of it into silver with an easy click, right? Because now it's a digital asset that's divisible. But what this yield, how this yield works is every time you transfer in and out of digital gold and silver, what happens is you pay either a 0.22% fee, right, to swap, or a 0.45% fee to send. So what happens is all of those fees are aggregated into what we call a yield pool. And that yield pool is then divided up and divvied back to people that use Kinesis to incentivize behavior. One of the portions of the yield pool is the holders pool, and that sits at 15%. So what I'm trying to say without overcomplicating this is 15% of all of our fees get divided out among people that hold gold on platform. Now, because the fees are paid in gold and silver, the holders pool sits in gold or silver, in digital gold or silver. So when that's distributed, right, when that fee sharing happens, it's in gold or silver. So now you can passively earn gold by holding gold. You can passively earn silver by holding silver. So now gold is a dividend or yield-bearing asset. So this argument that gold doesn't do anything is over. So if you had gold and Kinesis, not only are you experiencing this great bull run that I don't think has even gotten started, but month over month, your stack is increasing based on these yields and the fees that Kinesis brings in. Now, you and I were talking and I constantly try to figure out a way to translate this, and I don't want to misconstrue anything. But in May, the holders yield was 0.98% on gold. If you annualize that out, right, we don't have a crystal ball. We don't know if that's going to continue. But if you annualize that out, it's about 11.4% return to hold your gold on platform. I have friends that don't have a monstrous amount of gold on platform, but they're earning hundreds of dollars a month in gold by holding gold on platform passively, not doing anything but holding gold and protecting themselves. So their balance has gone up because of this run in gold. And every month they're getting stacked more gold just for holding. And that's only one of the yields. Like we can go through a couple of the other yields, but the holders yield, again, I don't want to overshoot this, is one of the most important things to ever happen to money. Because now gold can be used legitimately as a safe haven asset and as a savings technology by holding your gold on platform with Kinesis.
Yeah, turning traditionally yieldless bullion into an income producing asset truly is revolutionary. And one thing for a lot of people watching that maybe are in gold or just like more stability in their investing, you compare this 11.8% APY that you mentioned with the holders year to a 3 months treasury bill, you're looking at around 4.3%. So not only can you hold an asset that produced 28 record highs in 2025, but you're also getting a yield on top of that. So, yeah. I mean, when you put those together, it's obviously a no-brainer. And of course, we got to include silver in there as well as an option.
Well, let's just yeah, and to be completely transparent, the holder's yield on silver is not as great. And why is that? Because the velocity of money or the fees generated in silver is not the same size as the fees generated in gold. So that's why that is. And it's tough for somebody like me because I hold silver on platform and I'm not seeing those huge of a gains that people are seeing with gold. But I just believe the move in silver that's coming is going to happen so fast that you're either in it or you're not. Now with Kinesis, it's a click of a button, so you could probably catch up if you feel like, oh my gosh, silver's gone. With a click of a button, you can just swap out of gold and into silver, or out of Bitcoin and into silver, and then right back. So I mean, it's that simple. But yeah, there's so many cool things here, and I don't even necessarily think we should be comparing gold and the holder's yield to a traditional investment, like a treasury or any of these other things. I think we should be comparing it to dollars. So you have dollars in your bank account. What are they paying you? APR? I mean, the number's so small, you can't even find it, right? There's so many zeros in front of your return.
Doesn't even pay the $12 monthly fee.
Correct. So that's what I would compare it to, because here's the thing. You can have your dollars in your bank account earning basically nothing, or you can take your dollars, transfer them into Kinesis, hold them in gold, which is going to protect you in this inflationary environment that I think is going hyperinflationary. So you're protected there, and now you're earning on your money rather than it sitting in a bank. And listen, we haven't even talked about bank bail-ins or any of these other crazy things that are most likely coming. Your audience needs to look into this. This is one of these things. And if you guys haven't figured out, I have a giant tinfoil hat, right? But you just need to read the documentation. In your bank documentation, you are defined as an unsecured creditor. I'm not making it up. Go look at your own documentation. That was a new legal rule that was implemented a couple years ago, whatever, right? You're an unsecured creditor. What does that mean? That means when you put your money in the bank, it's not yours anymore. They don't have to give it back by law. It's not your money. You're a creditor. You're a creditor to the bank. Now, they give it back on demand at the moment because of appearances. But if this gets nasty, right now, if you go into the bank and you try to take out a couple thousand, they're going to hassle you. Okay? In the future, they may just say no. And you have signed something when you open your bank account saying you understand you're an unsecured creditor. There's not much you can do about it. This is the world you're playing in if you're holding dollars. I can't stress this enough. It's a debt system. It's a Ponzi scheme. It's not your money. It's fake. All of those things apply. So just be very careful with the money you have in dollars. That's what I would suggest to your audience. It's not a good situation we as humanity find ourselves in. And I think if you don't have, and let's start with Bitcoin to make the crypto crowd happy. If you don't have Bitcoin or gold or silver in your portfolio, when this starts going south, it's going to hurt. It's going to hurt a lot. So
now, I don't want to overwhelm the viewers too much by going over all the different yield programs. Just so you guys know, Kinesis does have, 6 or 7 different yield systems.
Correct.
But I do want to jump into the KVT economics, if you could explain that a little bit.
Sure. So Kinesis issues the 2 tokens that are the foundation of the monetary system, right? Are our KAU and our KAG tokens, the gold token and the silver token, again, that are backed one-to-one by physical, that have these audits, they're legal in your name, all those things, right? So that's the foundation of our system. However, for those of you that like a true crypto, right? It's not kind of this digital asset, it's a true crypto. We also have what's called a KVT token, or a Kinesis Velocity token. And this interview is so timely because until recently, those were only available on in private sales, but now they're on our exchange. So now you can go on our exchange and you can actually just buy KVT. You can buy it with Bitcoin, dollars, whatever, swap into KVT. Okay, so what does the KVT token do? First off, there's only 300,000 of them. So we talk about supply. Everybody should understand that. It's only 300,000. I don't know. I'm being completely transparent. I don't know what Kinesis has in reserves. I believe those 300,000 are all spoken for and out, but Kinesis may have some in reserve. So I'm going to have to get versed up on that. And certainly your audience can do its own research. But the 300,000 are basically all out there. Okay. So we did a token sale, an ICO back in 2017, 2018. And we, not in the ICO, but along the way, completely sold out of KVT at $2,000 a KVT. Why would anyone spend $2,000 on a KVT? Because the KVT token gets a huge portion of the yield pool at 20%. So 20% of all of the fees that Kinesis brings in, right, for swapping in and out of gold and silver, gets paid out to KVT token holders. There's only 300,000. The more KVT you hold, the more gold and silver you earn. And again, you and I were trying to kind of articulate these APRs before our interview here. But in May, a KVT was earning you $7.70, a single KVT. Now, this depends on current token price and what you bought at. But KVT, last I checked, we're going around $12.50. So if that APR were to continue, that $7.70 were to continue, you're around about 6% for the year. Again, this is based on fees, so it's hard to project out because that can change. We have times when whales you wouldn't believe come into Kinesis, buying gold and silver, fees go through the roof. Then we have kind of slower months. So we have ebbs and flows. So it's not always consistent, but our yields have been on fire lately because we're growing like crazy. So if that yield were to continue on the KVT, you're running about 6.4%, somewhere in there for the year. Now, what makes this very interesting is that limited supply. If you look into Kinesis and you come to the conclusion that, oh my gosh, this for a path forward for humanity is going to be a huge part of the coming monetary system. And I would argue what I think we want to see as humanity and what I think we're winning and I think what's coming is what I call a multipolar monetary system. So there's going to be different monetary systems that you can participate in based on what you're comfortable with, and they're going to be interoperable. So if you don't trust this, you can pull your money out in Bitcoin, transfer it over here, leave it in Bitcoin, put some in KAU, KAG. A lot of the states are now talking. There's like 14, 15, 16 states talking about coming up with a digital currency on the state level backed by gold and silver. So you're going to have all these multipolar monetary systems that you're going to be able to go in and out of based on your confidence in them. But the point of this is with Kinesis, there's only 300,000 KVT. So if you believe Kinesis could become a billion or maybe $1 trillion fee generating monster, which I think that the potential's there with what's going on with the current monetary system, you just take those fees, right? You take 25% of all those fees, divide them up by 300,000. What happens if KVT's earning $20, $40, $80 per token? What's the price of a KVT and what's the ROI on a KVT? Well, if you get KVT now and it starts generating $20, $40, $50, a month in gold and silver, again, the yield is paid in gold and silver. What other token is there that earns you a passive yield in gold or silver just by holding it? It doesn't exist. KVT is the only one. So again, there's this multi-play there where the price of KVT is going to go up based on market demand, based on what the market sees, as forward guidance for how Kinesis is doing, and based on current returns in gold or silver on the token. But the price is going to go up and the returns are going to go up. So if same thing as Bitcoin, if you kind of get in earlier, you're going to do better off. Again, none of this investment advice. Nobody has a crystal ball, but the setup is in. The old monetary system's dying. The alternative monetary systems are spinning up. And being at Kinesis, I'm acutely aware of plenty of other projects that are pro-humanity, that are spinning up, that are going to cause the powers that be real problems. So we are winning. The decentralization of financial technology cannot be stopped. There's too many projects. There's too many of us, right? And so this is just going to continue. And as it does, and people exit the old system and the writing's on the wall, all of these projects are going to explode, whether it's Kinesis or a couple of these other ones that are getting spun up that I know about. So, you look around and it seems a little bleak, but trust me, under the hood, humanity is deciding how to move forward. That's what we want. So things are not as bad as they seem, in my opinion.
And for the viewers, could you just give a soft, rough estimate of what the Masterfee pool as a collective has been like the last month?
Yeah. Yeah, absolutely. So again, the fees for all of our activity get collected in one big pool, and that gets divvied out. And we don't want to overwhelm anybody, but there is the holders pool, right, which we talked about. There's the KVT pool, which we talked about. There's also the velocity pool. There's a refer a friend pool, which is very interesting. You get a couple of codes in your account when you sign up and a link. And if you pass those on to your friends and they sign up for Kinesis, you can earn 7.5% on all of their fee generating activity. So, if you're a gold and silver bug, you're hearing about Kinesis, you're already sold or whatever, you sign up for your account, you can then pass out these codes to your friends that might be interested in, maybe it's crypto or maybe it's gold and silver, but when they buy gold and silver, you earn on them. So that's one of the yields. There's the partner yield, which I'm the partner program manager, as we kind of discussed, and that's a little bit different. But yes, there's all these yields, and it depends on which one you're talking about. But we're talking about multiple millions of dollars in fees being generated and distributed consistently now on a monthly basis. Again, Kinesis is not this is not some new project. Being in the United States, it may seem that way. You may not have heard of Kinesis. Kinesis did not ICO in 2017 or 2018 in the US. Very smart people here. We never wanted KVT to be deemed a security. So they just didn't ICO here, and you actually couldn't buy KVT from Kinesis as a US citizen. So that kind of was a protection there, right? But because of that, we didn't hear about Kinesis until now. Kinesis is just now starting to really push hard in the United States. I'm here in Florida. I'm here. The team is growing in the United States. I was one of the first people hired in the United States, so it's growing. There's a marketing push coming. All these things are happening. Kinesis took an interesting approach, was solidifying these markets in other areas first, and then attacking, the juggernaut that is the United States. Make no mistake, these places like India, these places like Eurasia, Europe, Australia, not all of them, but a lot of them understand gold and silver much better than we do as Americans. And Kinesis is a monster in some of these places, right? We have deals with countries like Indonesia, for example, where we're going to be onboarding so many people, and they understand gold and silver's ability to save you from inflation, because we've had the ability as a world's reserve currency in our lifetimes anyway, not to really understand inflation till now, right? When you look at the price of groceries, other countries get it. There are people all over the world that have lived through currency collapses. So their government can tell them whatever they want. They don't want to hold the fiat. They want to hold the gold and silver. So Kinesis is very popular other places. It's a monster. It's coming here. All these things are coming here. The other thing that needs to be discussed is the debit card, right? The Kinesis debit card. So this is really, really cool. So we're going to be releasing a debit card here in the United States, hopefully before the end of the year. These are always moving time frames, so nobody, take that as gospel. But it looks like before the end of the year, we're going to be releasing a debit card. And what will happen is that it'll attach to your gold and silver wallet. Again, KAU and KAG. It'll attach to those wallets. And then you can swipe that card in store. And what happens is the exchange instantly sells your gold or silver for dollars to make the purchase. So now that 0.22 fee applies. So this does a lot of things. This is going to send volume and fees through the roof as people start using their debit card to make purchases in store. But the second thing is it's going to do is now all of a sudden you don't need a bank, right? You don't even need fiat. You can be completely in gold and silver, and you can swipe a debit card and you can pay in dollars anywhere, whether it's Visa, MasterCard, whatever is taken. And so again, this is a huge step forward for us as humanity, because we can see what's going on, and we can say, you know what? I opt out. I'm done. I opt out. And full transparency. I think this is really cool. Working at Kinesis, we can get paid, and we can elect to get paid in any asset on platform. And as your audience has already guessed, I elect to get paid in silver every month. So every month, my paycheck drops into my Kinesis account in KAG based on the price of KAG, the number of ounces, and even without the debit card. Let me tell you how good our rails are. This is personal experience, right? My paycheck comes in KAG. I look at it. I look at my bills for the month. I swap a certain amount into dollars. That's one click, right? A swap on the exchange. And then my bank account is attached to my Kinesis account. One click and I withdraw those dollars into my bank account. Our rails are so good. As long as I do that by 10 o'clock at night, that whole process takes 30 seconds. As long as I do that by 10 o'clock at night, by 9 a.m. the next day, the dollars are in my bank account. So that's even without the debit card. The off ramps are that good in the United States. So I already am not, I just am in the fiat I need to pay bills. And I'm sitting in physical and I'm just letting, inflation doesn't bother me. These bank failures don't bother me. Bank bail-ins or whatever it is, doesn't bother me. My money isn't in dollars, hyperinflated away. That just means the price in silver doesn't go to the moon, and I'm going to be a happy person. So
Yeah, hey, you clearly don't just talk the talk, you walk the walk. I love that.
correct. Yeah, I mean, I sought out, right? I have this kind of self-taught monetary history. I sought out Kinesis for a long time because it may not be the way, but this is a way humanity moves forward.
Yeah, I mean, ultimately, I've been in the industry since 2017. I've seen so many companies rise and fall, so many stick around. There's not many companies nowadays that really catch my attention in regards to really offering unique products and services that I think can really revolutionize not just the crypto blockchain industry, but even the physical precious metal industry. Outside of the yield program, some other aspects that I find very unique with Kinesis, not even touching on your audits, which I think is so valuable and important for having that transparency for the people on the platform. You have the exchange physical for digital program, and you also have the redemption realism. Can you touch on both of those and just explain to the viewers what they are and how they could use them?
Sure. So we have a program called an EPD, or Exchange Physical for Digital, and it is exactly what it sounds like it is. If you have precious metals in your possession that you're sitting on, certainly if you're storing them with a vaulting service, because let's just think about this for a minute. And listen, it took me, I've been here over 2 years. It took me about 16 months for this to dawn on me, which is crazy. If you're vaulting gold and silver somewhere else, you're paying a storage fee, right? What I'm telling you right now is you can transfer in your physical from that vault to our vault, right? And again, it has to meet certain purity standards and all these different things. But assuming it does, you transfer that physical into our vaults. We issue you the digital. We don't charge you a storage fee. So your storage fee's over there, that whatever you're paying, that's gone. And we pay you a yield. So not only do you move from paying to not paying, now you move over to getting paid. So you can do an EPD and transfer in your physical. Now that's whether you have some at home or you're vaulting some somewhere else. So, you send us the physical. The physical goes into our vaults. We issue you the digital tokens based off the amount of physical you send us. So that's the EPD. As far as the redemption process, again, another key with any monetary system that we as humanity would want to be involved in is the redemption. That's key. If you issue some kind of token or some kind of paper that's backed by gold and silver, that's great. But unless it's redeemable, it doesn't really mean much, right? So our tokens are fully redeemable, meaning now there are minimums, but assuming that you have the minimum threshold, you send us your digital and we send you the physical. It's that simple. It's your physical. You can redeem it. You can redeem it to a different vault. You can redeem it to your home address. You can redeem it wherever you want to redeem it to. So it is your physical. You can redeem it out and put your hands on it. And listen, again, I get it, right? In crypto, it's not your keys, not your coins. In the gold and silver space, it's you don't hold it, you don't own it, right? That's the terminology that's often used. There needs to be a trade-off, because if you hold it, I kind of have been toying with this idea of if you hold it, you don't spend it. And that's true too, because you're just holding it and it's doing nothing. If you have a trusted partner like Kinesis, yes, it's not in your physical possession, but we have our audits. It's fully redeemable. As it goes around here, if you don't believe the audits, if you don't believe the safeguards, if you don't believe the Bailey agreements and the insurance and all of these things, our vaulting partners and all of these things, if you don't believe all those, at the end of the day, do a redemption. Your gold or silver is going to show up because it's there, right? I understand Kinesis is struggling against a consistent stream of lies when people tell you they have something when they issue you paper or digital or whatever it is. In our case, it's there. We do the audits. It's there. So you can redeem it ultimately if you don't trust that. So it's there. So that's the difference. And the redemption is a big part of that process, being able to get your physical out should you want it.
What do you say to the hard money purists who argue that adding yield invites risks that
okay.
gold was meant to avoid?
Okay, so very interesting because, and I've actually talked to a lot of people in the gold and silver space that would say the same thing, but that's a traditional mindset, right? The only way gold and silver has ever earned a yield in the past is by loaning it out. So there's the risk. I have this gold, I'm loaning it out, that's how it's returning for me, right? The risk is this person I loaned it to, right, runs off with it, goes bankrupt, whatever, my gold's gone. There's the risk. With Kinesis, that risk is not the same, and that particular risk is non-existent. Why? You're holding gold, and the yields is based off of Kinesis's volume and fees. So the risk is this. The risk is, for some weird reason, Kinesis does no volume in a month. No trades happen, but what's the risk? You would get no yield. Right? Now, ultimately, yes, that's unsustainable for Kinesis and there's a big problem. But when we're talking about yields, you would get no yield. The other thing is, again, okay, so Kinesis is holding your gold and silver. That Bailey agreement's huge. If Kinesis were to experience a catastrophic failure, a Bailey spins up and asks you where you want your gold and silver sent. So I am, the big term in gold and silver is third-party risk. And that can play into crypto too, but I don't hear too many people say it in the crypto context. But third-party risk is when someone else is involved, you have a risk of that third party, right? I have physical gold and silver in my hands, right? And I work here at Kinesis. I'm not going to transfer it all to Kinesis. That's not because I don't trust Kinesis. It's a diversification tactic. I have my physical. I know it's here. I also have my digital physical earning me a yield, right? So that's just how I've chosen to play it. I would not suggest anyone take 100% of their physical, and if they want to hold some onto some and send it all to Kinesis, hold on to some and send some to Kinesis, or start buying it through Kinesis and keep your stash on hand if that's what you want to do. But the third party risk of, oh, this is generating a yield, there's some risk here. The way the yield is generated with Kinesis through the fee sharing of the platform doesn't directly put a risk on your physical. You're not loaning out your physical to get a return. Your physical is yours, and it just qualifies you for fee sharing, revenue share that Kinesis generates. So I hope that clarifies.
Yeah, absolutely. Now, for you personally, what are you looking most forward to over the next 12 months with Kinesis and also just the industry as a whole?
Yeah, I mean, the debit card is the elephant in the room that Kinesis has been trying to attain for, if you've been following Kinesis, several years. We actually had a debit card in the US for several months in 2020, and then because of regulations, it got shut down. Then we had the debit card overseas for a very long period of time because of regulations, that got shut down. But all that red tape now has been overcome. The regulatory hurdles have been clearly defined, and we're clearly now going to be within them. So we should have no problems moving forward. Plus, there's some redundancies going to be in place. So it's going to be a little different this time around. But the debit card is, again, it's game changing because you can decide to be done with the current fiat system. I mean, almost exclusively. Yeah, there's some things you can't pay with debit cards, so you're going to need some cash for that. But the majority of your purchases now, you can just hold on to gold and silver and spend when you need to. So that's the big one. The next big one is just growth. I mean, again, the growth of Kinesis directly translates into fee growth, directly translates into higher yields across the board. So whether it's KVT or holders or your refer a friend yield, as more people hear about it and they've heard it, and then you tell them and they sign up under your code, all of these things are going to generate you income. So those are kind of the most exciting things is the growth that's happening now and will continue to happen. And then the debit card, and make no mistake, when the debit card comes out, the volumes are going to go through the roof again, translating into more fee generating activity and then more yield. So there's a whole bunch of things. So if you want to call, crypto people always talk about base layers or layer ones, right? If Kinesis is the base layer, the monetary system, there are all kinds of things I cannot talk about being built on top of Kinesis or in conjunction with Kinesis, things you're going to be able to do with your gold and silver. We have a merchant service Kinesis does called KPay. So it works kind of like Visa, MasterCard when you walk in the store and they have the terminal. KPay is the same thing. If you're a KPay merchant, right, you can accept gold and silver for payments on your goods, whether that's online or in store. So, we have a whole system rolling out that's going to be grabbing KPay merchants. So again, another way to just directly spend your gold and silver with merchants and avoid dollars. And listen, let's not overcomplicate the fact that around the world, an ounce of gold is an ounce of gold. So, when you're doing transfers overseas, this thing is huge for payment services. Why am I gonna, take my dollars, pay FX fees, swap into this, swap into that, just to drop, another currency in your bank account for some service you provided me? Now I just send you gold with a click of a button. And then you swap the gold into your currency through the Kinesis system and you off-ramp it whenever you're ready. So there's just crazy use cases. Shipping companies, I hear their employees on these ships are from all kinds of different countries, and payroll's a nightmare because they're converting dollars or whatever currency it is into dozens of other currencies to pay their employees. Why? The shipping company should hold gold, pay all their employees in gold, and they can exit into their currency as needed. And certainly once the debit card's available, that they don't even necessarily have to exit in their currency. They start using the debit card. So these things are game changing, and this isn't just, yes, Kinesis is the conduit, but I'm trying to relate to your audience that humanity is rising up and saying, listen, we've sniffed out what's going on here. We get that we are grossly on the losing end of this stick, and we're done. We're done with it. So whether it's Kinesis or Bitcoin or crypto or some of these other projects that I'm familiar of, this is humanity. We're saying we're done. We're opting out in mass. If we opt out, that's it. It's over. There's nothing they can do. They can't. If we refuse to be trapped in the system that we lose in, that's it. That's just what we've decided, and that's where we're headed. So that's the most exciting thing. Yes, Kinesis is exciting, but seeing humanity collectively working together to get us out of this situation is, I think, the most exciting part of the whole thing.
Yeah, and you touched on you're really excited for Kinesis as a whole with the growth. I really do think Kinesis is in a very unique spot. We will likely continue to see uncertainty and instability in financial markets, geopolitically, et cetera. And there's not many other blockchain-focused platforms, crypto-focused platforms that really hone in on gold and silver like you guys do. So being able to combine those two, as well as obviously you guys offer Bitcoin on the platform, those are really, I would say, those three are like the safe haven assets right now for most. So you have a marketing pitch to the average retail investor that really not any other platforms can even compare to closely. And I think
that holders yield again is a game changer in the history of money. So that one thing alone, if you don't, if nothing else gets taken away from this conversation, from your audience, and even if you traditionally gold's boring, not interested, whatever, okay, that's fine. How much are you making off the dollars in your bank account? Because you're making, if it's annualized out, granted, if it continues, you're making 11.4% here at Kinesis. So, yeah, gold's a little bit more interesting than you remember it. Now that it's digital, it becomes much more fun.
Yeah, absolutely. This is genuinely the first time after, utilizing your guys' platform and working with you and your team. This is the first time in my entire life where I've really took into consideration the pros and cons of not being involved in and being involved in precious metals. So
Cool.
you've changed my perspective. I'm sure people watching this, whether they're my age or a little older, we do have an older audience. So I don't know why I just did a thumbs up. I don't know if you see that.
Let's get you. I want to see. Listen, I'll believe you when you tell me you purchased some silver.
Yeah, hey,
I'm gonna
valid,
convert you. I'm gonna
valid.
convert you.
Well, Chris, I really appreciate you hopping on. I think this was a great conversation, really diverse. For everyone watching, I hope this gave you a little more clarity in regards to what Kinesis offers. The insight, all the insight on silver, I think was huge. I never really knew about any of that, and that definitely changed my perspective. And I'll be looking into a lot of those topics that we discussed. One
Great.
thing to mention is that you guys actually offer half an ounce of free silver, your favorite asset, when you use the unique link down below. So if you guys are interested in signing up, you can use the link down below or code DataDash, and you'll get half an ounce of free silver to your account. Chris, thank you so much. I really appreciate it. I'm sure this won't be the last time we have you on,
Yeah.
but I'm looking forward to seeing you guys grow.
Yeah, I'd love to do it again. Believe it or not, we just touched the tip of the iceberg with the shenanigans going on with the monetary system. So I'd love to come back, hash some more of it out, and really related to crypto too. I know your audience loves crypto, and I want to make sure that everybody understands I love crypto as well. So yeah, very, very good fit. Very excited. Love to come back whenever you're ready. Let's do it.
Great.
Cool.
Thanks.
Appreciate it. Yeah.